Welcome back. It is Vetted VA Live, joined with our experts here to go through important topics around VA mortgages, real estate, using your VA benefit to acquire and control real estate. And we have an important one tonight. It's a big topic, has been since 2022 when rates shot up. The funny thing is, for the 40, 50 years prior to that, no one cared about assuming a VA loan because rates just went lower. You could get a lower rate than the seller had when they initially took theirs out. So as we all know, despite the fact that rates are down, a percent and a half from the peak, they're still well above where we were during that COVID era. And we do have veteran sellers, and we're going to talk about some non-veteran sellers who have very excellent COVID era interest rates that you can benefit from. So today we're going to talk about it. We're going to go through everything you need to know. And it's funny, normally our audience here is only veterans, but since non-veterans can assume a VA loan, anyone who would like to buy a home should pay attention to what we are talking about tonight. We have a couple of just changes and updates recently, and they're more like clarifications. But Jason, you want to talk to us a little bit about this new VA entitlement acknowledgement requirement and why that's important, both for who's assuming the loan and who is having their loan assumed.
So it's the 26-10291, I believe is what you're referring to.
Yes, sir.
It's an acknowledgement that the buyer is sending to the seller, getting the seller to sign. And it's an acknowledgement that I can pull it up, but it's like the risks that are probably not.
And really, I'm going to assume that the reason for this is we had some veterans allowing their wonderful interest rates to be assumed and not fully understanding what that means for their entitlement. If it's a non-veteran or a veteran not substituting in their entitlement.
I was going to say in the early days, or at least when assumptions started to become popular, there was a little bit of not very clear on the proper way to go about it. And so I think there was transactions happening where the sellers, they negotiated that, hey, the seller's, entitlement's going to be transferred to the buyer. But then the follow-up paperwork, the follow-up, actually making it happen. So the transaction would go through and everyone thinks that it's going to happen. And then it closes and everyone's like, hey, we're good. And then all of a sudden the seller's kind of like, whoa, wait a minute. My entitlement hasn't been transferred.
If I can interject, I can kind of say that because the mortgager, when a veteran is assuming another, well, we'll just say it's between two veterans, obviously the substitute entitlement. So when that's happening, the mortgage company does not care whether or not your entitlement is substituted, right? That's not part of their problem. Their servicing department is making sure that the loan has been completely substituted itself. They're not concerned with the entitlement itself. Just as a matter of fact, I had a reason to pull up my own, and I don't think I did the substitution of entitlement right because, again, it's not something that's taken care of with the loan itself. It's something that you have to do after the fact, with the Veterans Administration. There are specific forms to fill out there to do that.
And because we've covered this topic before, I probably jumped in a little too hot. For those of you just showing up who have no idea what an assumption is, or you've heard an assumption, you wanted us to lay it out and explain what it is. An assumption, whether it's a VA loan or another type of assumable loan, the other primary one is FHA, allows you to take over the loan of the seller, including their wonderful, much lower fixed rate. It's really the only reason why you would do it. If they had a higher rate, crappy rate, you'd be like, well, what do I want that for? You want their low interest rate. So one of the big things that can happen with this, as we talk about, many of these rates were COVID or pre-COVID. And what we also had at that time was home values shooting to the moon. So most of these people have wonderful interest rates that you would like to have, but they also have some home equity there. So Alexis, what does that look like when we have a gap between what someone is buying a home for and that amazing 2.5%, 3.5% VA loan that they would like to assume?
Right. Now, I do want to talk about how do you get that rate? Understand, Josh just said you are only getting the mortgage. So what does that mean? Let's say the house is $500,000. Okay. The house is 500,000 and their interest rate is 2%, but they owe on their house or loan balance is 450. You're only assuming the $450,000 part of their mortgage at the 2% interest rate or whatever the interest rate is. That leaves 50,000. So that's what we're referring to on the show, talking about equity gaps, right? So everybody understands what that is. So note that whenever you're seeing assumptions advertised the same for FHA, you're only assuming that low interest rate at what their mortgage balance is. So meaning what they owe on their loan. But yeah, I love assumptions. I've done a good number of them. I think they're a fabulous tool if you have the means to cover the equity gap. Now, there's several, I'm going to save some because I'm not going to talk too much, okay? But there's several avenues you can go through to get that gap. So in that case, the formula I just gave where the house is 500,000 and then the seller owes 450, you have a $50,000 gap there that you have to cover. Some people have cash. I mean, if you got deep pockets, you're rich. Wink. Okay. Not me. But you can just pay it cash. But it's also nice if you're selling a house. For example, if you're selling a house, you might have extra equity from that. You could borrow from your TSP. Okay. If you're active, some people do that. You could also take a loan out from a friend or someone, or
That's a good friend, Alexis. That's a good friend that can come through with some cash like that.
Rich uncle.
Don't call me because my pockets aren't deep. Y'all know.
So are you saying your realtor can't loan you the money? Is what you're saying, Alexis? Is that what I'm understanding?
Yes, that's accurate. Especially if I'm a real estate agent. Okay, I don't have it like that. The man does not like that. All right, but yes. So you can borrow against your TSP. You can do a loan. You can also take out a private loan. However, if you're going to take out a private loan or any type of loan, you're going to want to make sure it doesn't affect your DTI. Your debt to income ratio. Now, I'm a real estate agent, not a loan professional, but unlike a traditional real estate transaction where it's just a straight up finance, when it comes to assumptions, you will most likely find yourself talking to a real estate agent much more than you would a loan professional. Where in a traditional transaction, you're talking to the loan professional much more in depth about lending loan type.
Let's explain why, Alexis, you have had to become, especially in the case of assumptions, a mortgage expert. Why can't they call Josh the mortgage guy when they want to assume the loan? Why is Josh the mortgage guy not involved?
You can call Josh if you want. Sometimes he likes to talk, but you're not going to want to contact Josh because you have to go through the loan servicer. So who's a loan servicer? The loan servicer is whoever the mortgage company is that holds that seller's loan. Okay. It could be big names like Wells Fargo. It could also be some names you've never heard of, but you're going to have to go through them. Now, often in the pre-approval process, you'll go get pre-approved through whatever lender, Brandy, all right, Josh, Jason does loans too. Hey, okay. You go get pre-approved through them and you go find a house, 500,000, no assumption. That's great. Your real estate agent is going to be really talking. However, they're not going to be talking to you about the loan. However, with the assumption, you have to go and get pre-approved with the loan servicer. Now, sometimes that could be problematic. I'm a real estate agent, not a loan professional, but let's say you have really low credit. As you all know, if you're in vetted VA, the VA loan, you have no minimum credit score required for a loan. That's going to be dependent on the lender. Okay. However, with these loan servicers, they might have something where you come in with a 580. They're like, this isn't gonna work over here. Bye. So you're gonna have to get pre-approved you're going to want to come enter the transaction pre-approved. Definitely just make sure in general that you're close enough to purchase a home. But you're going to have to go through the pre-approval process with the loan servicer, which I can tell you right now, having done a few of these, this home I'm talking to you in, I know Brandy too, right? We're some assumption queens around here. We purchased this home. That's right. We purchased this home on an assumption. However, oh no, I just lost my train of thought.
Well, let's talk. You were just talking about kind of what those timelines look.
Yeah.
Borrow time.
Hi.
unfrozen, or is it still going crazy?
Okay, we're good.
Was
Looks
that
like
me?
No, I think it was Josh.
No, I think it's here on this end, and I have no idea what happened. I froze, and then you guys all took various turns of
Visit
freezing.
California with those rolling blackouts. I'm
Rolling
sorry.
blackouts. It's our California governor. You can't keep the power rolling.
Okay, I'm a California girlie down, but back to this.
But before I froze up, what I was saying, I think where you're going with that is, I have a normal standard VA purchase, a very well qualified borrower. We just closed it in 19 days. That's super doable for a well qualified borrower, standard transaction with no problems. Can I assume a loan in 19 days?
No,
Highly
no,
unlikely.
no.
So what does that process look like when you're going through the servicer? You don't have a loan professional who's hand holding you, walking through, making sure things meet a timeline. So you guys have all been through these. I'm at a deficit here. I've never participated in an assumption. I've been around them. I've seen my realtors asking me questions about them and letting me look over their shoulder. But you three have all been involved in them. What should someone expect in terms of a timeline for an assumption?
Jason, do you have experience with this?
Yeah. I would say 40 to we had one that went out like about 110 days. That was our longest, but most of them were right around that, like 40 to 60
days. Yeah.
Yeah. I found that being a squeaky wheel, like, like, and
Exactly.
not just the agent, but all parties involved kind of hounding
That's
the servicer
100%.
going, you know, what's next? What do we have to do? What do we have to provide you? I don't remember which servicer, but there was one servicer that was using like an AI system that was reading the emails, and they would generate responses based off of. And so finally we got to a point where it just kind of went dark, and we literally said, we want to close. Like, what do we have to? And it's like, and then it generated like a date, and it was like 3 days later. And we're like, seriously? Like, that was what we're waiting on? Like this.
That's all we had to do was ask when we close.
Yeah, exactly.
Awesome.
But yeah, that was my experience.
Yeah, I would say that even around like that 60-day mark, like I assumed my own. And if I can just interject and say like where this might be beneficial. My ex-husband and I were both veterans. And so in our divorce, obviously one person gets the house. And so this is a super beneficial tool for divorcing veterans where one can assume the mortgage of another. So that's a good way that it can be done. But like, even in my experience, like knowing exactly, pre-qualifying myself, having all the documentation, knowing exactly what I needed, sending it into them and them not getting the documentation, it literally took over 60 days.
And that's not uncommon. One of my realtors, my podcast co-host, he had a unique situation. The veteran had passed. So in this situation, they were like, anyone come assume this. We do not care if anyone substitutes their entitlement because the veteran is no longer with us and doesn't have to do it. The downside was with an estate, with a servicer, with two realtors that don't specialize in mortgages. It took them about 90 days, but that was a $800,000 mortgage at like 3.1%. Wow. So for the buyer, they were very, 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 very happy to have got this. So we talked a little bit about, we don't have a mortgage professional involved. We still have an escrow. So we still have fees, right? We have recording fees, escrow, title insurance, that type of stuff, because you still want to get insured. What other fees would you look at? I mean, you guys went through this yourselves. What type of fees that would normally be like loan origination fees or loan processing fees? What do you see in terms of an assumption?
Still gonna
we have prepaids. Yeah. You're gonna want, they're gonna collect up front. So in case you don't know what a prepaid is, your property taxes, your homeowner's insurance, that's going to be collected. Your title insurance, Josh just talked about that. HOA dues, we're transferring ownership. So it's very much like a traditional transaction at that point. So, you still have that. You'll have your settlement fees, depending on attorney or title state. Am I missing something? There are fees attached. You have a VA funding fee. There's a fee involved. I don't know it off the top of my head. We did get a sheet on that, so y'all.
Yeah.
So-
the lenders are going to have some of their
Yeah.
specific fees, like
Right.
for mine specifically, they had like a $356 fee where they wanted me to mail a check, like physically mail a check. I know there's some clunky banks out there. And then there are some minimal fees with the lender themselves, but everything else in the transaction is very similar. You're going to negotiate whether or not, which this is something that like any veteran can do. You can do your own assumption, but you need the guidance of a real estate agent or some professional to sort of help navigate all the things so you don't miss some things. Because I know there are some people who believe that purchasing a house subject to is the same as an assumption. Right. Yeah, there are some, I've run into some people who believe that that's the same thing, and it's not the same thing. So you have to understand the differences in like opening escrow, having a title company, having all of that stuff checked out. Maybe you want to get an appraisal. Maybe you want to get an inspection. Maybe there's some things that you want to do that you should be guided from a professional to know. Some of those costs are going to be outside of the actual purchase itself, but still very beneficial to you to protect yourself.
Now, an appraisal is not needed on an assumption. Okay.
Right.
It's not needed. Somebody
The
might want
loan
to get one.
servicer is only ensuring that when it comes to credit too, they're only going to check to make sure that you have enough to cover that loan balance. Right. So if we go back to that 450,000, they're going to make sure you're qualified for that. And there won't be an appraisal. So it's very important to make sure if you're shopping that your agent, somebody's running comps to make sure you don't overpay. Because
that's what I was going to say. The benefit.
Yeah, with VA loans, you cannot waive the appraisal. We talk about that a lot. There's some loan types, you can, depending on what you're putting down and stuff like that. But with the VA, you're not able to waive the appraisal. However, with the exception of assumptions. So you can easily overpay for a house. Do consider either paying independently for an appraisal, what Brandy's talking about, out of pocket. Typically that appraisal fee is wrapped into your closing costs on a traditional loan. But this is an added fee that you would be paying out of pocket up front, the same way you pay out of pocket up front for a home inspection. And make sure your agent or attorney who's ever drafting the contract makes an offer contingent upon appraisal if that is something you choose.
Especially if you're going to be paying a gap. You know what I mean? Like you want to make sure that if you're going to take that cash out of your pocket, you want to make sure that the value is where you believe it is and the seller believes it is. Because the seller always thinks that their house is worth more and the buyer always thinks it's worth less.
And that's an interesting point, because where we were talking about, we've done entire episodes on the loan estimate. So if you want to go back and watch those, box A are fees that are paid directly to the lender. Box B, there are things that you cannot shop for, but that's where the appraisal, that's where the credit report show up. So if you were assuming and you were bringing in your own down payment, you don't have a gap, so you're not having to get another loan. Those are going to be nominal to close to zero. We're talking $300 to $500. But as you guys said, you might want to have your own appraisal. Now, if you do need that gap and you're going to get a second mortgage and you do get Brandy to do a second loan for you, there's going to be costs with that. So we're going to have two separate sets of costs. You may still need that appraisal, probably will need that appraisal. So what you're probably starting to see here is these are very unique transactions, and more than almost any other type of transaction, you need experts on your side. One of the reasons why Chris started Vetted VA was to make available both real estate and mortgage professionals who are very familiar with the VA process. But I would say on an assumption, more important than on any other type of transaction, because they're unique, and most mortgage and real estate professionals, especially mortgage professionals, have never been around one and don't know in any world what these details look like. So if you need a second mortgage and you call someone up that has done 0 VA loans and they go, "Oh, you're assuming a VA mortgage? Yeah, I can get you a second." They're going to have a learning curve here, because there is just a lot of moving parts that are a little bit different. Why don't we
talk about secondary financing real quick before we move on? Yeah, because secondary financing is a funny thing that people ask a lot of questions about, and they think, oh, well, I'm going to get the loan for $50,000 if the purchase price is $450,000, but the value is $500,000. But that's not necessarily the case with like most secondary financing lenders. They're only going to go up to like 90% loan to value, which means that you're going to have to come up with like 10% yourself. So it's kind of a misconception that you're going to get a loan for the entire amount of that gap. So you should be prepared to come in with some money yourself. And that's such a big misconception that people, start going down the rabbit hole of wanting an assumption and looking for secondary financing unless there's something new. But my experience is that most lenders are only going to go up to a 90% loan to value.
And making sure your offer is contingent upon your ability
Getting
to
that secondary financing.
that financing as well, because you could perhaps be penalized financially in the transaction.
Well, something you said there is really important. I've seen there's 95% financing out there. And if you look at it, you're like, oh my God, like the rate is so awful that you have to look somewhat at your blended rate here. If you're here in Southern California and someone has an assumable loan for 3% for $300,000, but the home's $800,000, when you look at the blended rate between that second, it may not be that much more attractive than a new first. So sometimes sellers don't understand this. I've seen flyers come over from realtors and they're crowing about, hey, you can assume this loan. Like, it's this big of a loan and the house costs this much. That doesn't really do anything for you. Alexis, how is, other than a realtor looking and hoping that the listing agent has put it in the MLS, is there any other way for buyers to seek out and try and find these properties?
Okay, well, what I've done, matter of fact, the last assumption I did, I found my clients were looking for assumptions was their goal, but they were also just looking for a home in general, right? So I'm in an area that's kind of close to a base, and it was about 3 years later. Okay, hey, you're moving. Let me go back in. If they weren't advertising that that they were military or that they were offering an assumption, but I went back in. I was able to see from when they bought it, the sellers from when they bought it 3 years ago, that they bought with a VA loan. And I reached out to the list agent to kind of ask. Oftentimes, if you go and you tour a house, you see military stuff, ask. That's how oftentimes you can see it. There are third-party sites. Sometimes you could search words like assumption, assumable. However, not every agent's going to know how to advertise, and also not every seller's going to understand that tool is available for them to market. So basically, you don't know what you don't know. This is also why having an agent who understands how to, research and check that out is going to be beneficial for you. Mm-hmm.
So we promised that talking tonight, because non-veterans can assume VA loans, that it was valuable for non-veterans, but we also hinted that there's a piece where a veteran might not want to use their VA benefit if they come across a specific type of assumption. Why don't, Jason, you walk us through a situation you had here recently. Why would a veteran consider assuming an FHA loan if that popped up versus using their VA benefit?
Well, I mean, for the same reason they might have been looking at the VA, looking for an assumption for that low interest rate. Maybe you live in an area that just doesn't have a lot of veterans. Idaho or Kansas, actually Kansas does because they have an air base, but nonetheless, if you're in an area that maybe doesn't have a lot of VA loans, or you're just not coming across a lot of VA loans that are assumable when you're out looking to buy, realize that FHA loans can be assumed just as a VA loan. The situation is very similar. You will have a your PMI, so you're going to be paying a monthly PMI, but if you're still assuming at that 2, 3, even 4%, and you're out there trying to find that, and your only other option is to maybe use your VA loan, but it's just to buy a house outright at, 6% or whatever, you may find that the FHA assumable loan might be another option. I had a veteran that was looking, and they happened to come across a place, and it was assumable, and it happened to be an FHA. And when we ran the numbers to either use his VA loan or just to assume the FHA, the assumption on the FHA was significantly better, even with the PMI. Mm-hmm. And it worked out very well. It took like 50 days, kind of that same time window as the VA assumables. And this veteran had the cash difference, so they weren't taking out a second loan. Mm-hmm. Something I wanted to go back though on qualifications. This actually was one of we had a buyer happen to where they were pre-approved. Everything looked good on a desktop automatic.
Pre-approved for a standard loan before finding
right?
something to assume.
Yeah,
okay.
Yeah, exactly. Went in to assume a loan and went to the servicer. they, did their credit pull and everything, and they said, not allowed. And we're like, why? And it's because when they ran their assumptions, they did a manual. And I think in this case, this buyer had a slightly higher DTI, even though they had the income, and on the manual, there was a cap. Luckily enough, we went to the VA, and the VA kind of pushed back on the servicer to tell them to run it automatic. And it actually did go through, but without some additional effort going to the RLC to kind of push back on this servicer and that. But it's just something to realize that they may not run
Alexis,
the
didn't you have a
approval.
situation like that?
Similar. Yeah, similar, where people aren't qualified with the loan servicer. Something to note is that the loan servicers, everybody kind of talks about how real estate agents are paid, right? Our commissions talked about in the headlines. Lenders are getting paid too, but they're getting paid on that front end when the loan is first really started. So understand that the loan servicer, it's actually cheaper to lose you. Okay. Because when you come in with an assumption, if you're going to purchase with an assumption, your loan is being worked the same way with the same amount of energy and effort that they would on a traditional loan. But they're making literal pennies off of it. They're not making, a larger sum. I'll leave it to loan professionals to tell me how much they make on loans. All right. But so with that, this is just like real estate, just like any other job. Some people who aren't getting paid, well, they're not going to be knees to chest, hustling to get it done, So understand that there's a timeline sometimes that is kind of just due to laziness, but also we're using acronyms in here. We're using like abbreviations. So DTI is debt to income. Okay. RLC is a regional loan center that is, they're scattered throughout America, and like VA little headquarters, they got like TRICARE South, you know what I mean? Kind of like that, right?
Well, let's talk.
I was wondering.
Yeah, let's talk about one of the things you said. That's important. We talked about not having any box A or possibly any box B fees. And you're like, oh, this is great, right? Well, the person that earns those box A fees is highly incentivized to shepherd this process through and make sure that it works for you. There is a mortgage company on the backside that makes money by originating mortgages. Like Alexis said, there's no real money to be made for the lender to keep this. This is a really low interest rate loan that they probably would be happy to have pay off and roll off of their books. So it's not, you've got multiple things working against you here. It can and is successfully done. These three have all said they've been through it many times. So it can be done. So we're not telling you this to tell you don't do it or it's not worth it or you're not going to succeed at it. Just be prepared for what you're going to run into. There's no incentive from the lender to do it. They have guidelines that are probably far more restrictive than what the VA guidelines say for using your benefit. But you can push back. You can have your realtor. If you reach out to any of us in Vetted VA, we have an altruistic streak here. And despite the fact that there's no money on the line, I'm sure you can get a Vetted VA expert to help you if you find yourself kind of painted into a corner and not getting this. And it's not so much that the lender is like, we don't want to do this. It's that there's no incentive to do it. And they have a little rule book over here, and they have people who are paid by the hour sitting in a cubicle to follow that rule book. So if you fall outside the box, you probably need someone to push back and handhold and guide you through that. And that person may need to be you. It may need to be your realtor, or it may need to be someone here in Vetted VA if you guys were going to reach out. Now, guys, we have a question tonight. The question has absolutely nothing to do with assumptions. So I'm hoping as expert Vetted VA moderators, you guys have the answer to this. Austin Bean, or Bean Austin, says, is there someone I can message about a friend being added to the Vetted VA group? After looking at her page, there were no questions for her to answer, but she has been in queue to join the group for a while.
Ooh, this is an Alexis question.
Who
should their friend reach out to get out of the queue and in the group?
All right. So Bean, I'm Alexis Brown. Bean, if you're already in the group, I believe you said you're already in the group. I'm going to message you. So I'm going to message you privately, Bean, and I'll walk you through the steps, and we can chat about your friend. So you'll see a message request coming across from me. My name is Alexis Brown, and I'll walk you through it.
And she's the queen of letting people in Vetted VA.
Or not, if you make her.
Or not.
Yeah.
Those are your two options. Be nice and she lets you in, or she just ignores you
First of
altogether.
all, I am nice to everyone, and these are Christopher's criteria for joining the group. And guys, the reason why we kind of have for the Vetted VA Facebook group, for the main group where there's just veterans, and then the group we also have one strictly for professionals, is in Vetted VA, the mission and foundation of Vetted VA is we want to make sure that the information is being put out is precise and exact. And not saying that we're the only, group, in the world that knows everything about VA loans, but if there were other outside entities who were perhaps professionals, they could start, for example, this conversation we're having on assumptions in Vetted VA, there's a large portion of us, a large group of professionals in there that have worked with assumptions, and we can give you solid fact-backed answers where other people aren't. And then, just like any other military group, well, you got to pass a sniff test, sniff test, excuse me.
Whoa.
Whoa. Oh.
You're gonna run afoul of group rules here, Alexis.
I know. Yeah. And the other part of that group is that you're not going to get solicited in this group. So we keep it very tight. So there are not professionals who are not vetted, who are answering questions for you that may be in their best interest rather than your best interest. So all the professionals in Vetted VA are working towards answering questions that are in your best interest without benefit to us.
So guys, I think
I found you. I got you, girl.
Perfect. So I think anyone watching can tell assumptions can be a great thing. They're complex. They're going to be a little bit difficult. Why don't we kind of run through both for buyers and then also for sellers who may be thinking, hey, I've got a great rate and I'd like to sell my home, just kind of what they need to know or do. So Brandy, starting with a buyer, if someone reaches out to you and they say, hey, I want to go look for an assumption, what are kind of the bullet points that you want to walk through with them so that they don't end up on the wrong side of a situation or miss out on opportunities that are out there?
Yeah. For first benefit is like, you have to speak with the mortgage professional and get pre-qualified. You have to they have to look at your documents. They have to run your file through automated underwriting. They need to verify funds that you're going to use if that's something that you're going to be looking for. So if you're going to go out seeking those assumptions, then you need to know that you're qualified for a purchase or the assumption, so that's number one is just getting pre-qualified and being prepared for that. And then having a professional that you can bounce those scenarios off as you're finding them with your real estate agent. Now, I am not going to be your loan officer, obviously, as you go through the process, but I can help guide you through the process. So I'm an observing third party that's just kind of giving you some advice if that's the route you're going to go.
I told you we had altruistic pros around here, and it's sort of the nature of the beast. It might be as a loan officer that one of my realtors is their agent, and we're going to help to preserve that relationship, to build a relationship with you. There may be another day when you move away, when you want to do an IRRRL on that property, when you want to do a cash out, probably not going to do an IRRRL with rates as low as you're assuming. But from that perspective, the things that are important from my end to remember is you don't have to be a veteran. You would have to find a veteran that's okay with you assuming it and not replacing the entitlement. Like I said earlier, I had a situation where the veteran was deceased. Totally cool with that. They weren't super worried about being able to use their entitlement again in the future. So as Brandy said, you still have to qualify. That's kind of why you start with a loan officer. And why would a loan officer be willing to have that conversation with you is you may not find something to assume. You may end up needing to get a normal loan. So we are always happy to build a relationship with you, even if it's unlikely to end up in that situation. So we covered the big stuff, the benefits of it, obviously the lower interest rate. The downside, you're going to have to come up with a chunk of cash, most likely, that can be done with a second mortgage. Alexis can loan you the money, or family members when it's properly documented. We didn't really talk about that. Properly documented, you're going to have a note and a deed, and it's going to have to detail the repayment terms. You can't just say, my dad's going to loan me the money. Here's $50,000 that just popped up. It's a little bit more involved from that end.
As we're seeing the market change, we are seeing that gap shrink a little bit. So maybe you don't have to come up with cash. Maybe they're just like, you know what, just take it where it's at. You know what I mean? That's also a possibility. So.
The VA does allow, I haven't come across a buyer that did this, or I guess it'd be more of a seller, but the VA does allow the seller to carry the gap.
Yes, correct. Mm-hmm.
So it's another option if they didn't want to go the traditional HELOC or loan route.
And people would always ask, why would a seller do that?
Oftentimes
Oftentimes the assumption makes the home worth more because you'll pay more for something that has a lower payment. Being willing to carry makes it more likely to happen, and it can give them a cash flow in terms of interest. They're going to charge you interest on that loan. So it can be a win-win. All of these are unique situations that are not super likely to occur, but they absolutely can. I mean, every one of them is a one-off in one way or another. So it helps to know all of your outs and all of your options. From your end, Alexis, when you're talking to a seller, what does a seller need to know if they need to get out and they've got one of these wonderful interest rates? What are you walking them through that they should be prepared for?
Let's market it as an assumption. But we didn't talk about inspections. We talked about appraisal. I want to get back to that question, Josh, but something that's really important is sometimes people think that the VA appraisal is also like this heavy duty inspection, right? Lender required repairs. You might hear that. With an assumption, there's not going to be any lender required repairs. Positives for a seller, even if you don't have a buyer who comes along, whether they're a veteran or they have enough eligibility to purchase on a assumption, it does get people in the door. I can tell you that. It's definitely a marketing technique. Even if they're FHA buyers, conventional, USDA, they see a 3 and they're sitting at the door and they got a 5, 6. They're like, let's go look at that house. You know, if there's a will, there's a way. People get excited. All money's green and everybody has a dream, they say, and that assumptions brings it all out. Okay, so I think it's positive to have your home advertised, but with stuff sellers need to be aware of. We talked about assumptions and making sure your eligibility is there. Timeline is going to be really critical for this too. Often in lending, there's a lot of, you could go through underwriting up front. You could go, depending on your lender, if somebody, you have a lender squared away, they can make sure you're financially solid, right? Like a week after going under contract. However, for assumption, remember, they're not, some of these people are dragging their feet. You might not know to the very end if the buyer is going to be able to close on that house. Okay. So maybe they are, depending if how they have to come up with their funds. So sellers need to understand the timeline can vary. If you're PCSing, that could be something that could perhaps be challenging. If you require a power of attorney, you have certain situations, understand that the loan servicer, you're going to want to make them aware of all of that up front. In a traditional transaction, buyer and seller really aren't talking a lot, okay? They're talking through their hired representatives. With an assumption, it's also not uncommon for everybody to have everybody's information, and some loan servicers will do one email. Everybody's on the same email, okay? A loan servicer on a deal I was on was telling somebody, you know, are they going to pay off a $200 debt? But me and the seller I was representing the seller. Me and the seller were CC'd on that email. So just understand that everybody's going to have everyone's information, which is a little bit non-traditional in that route. But if you're a veteran active duty service member and you have the option, the ability to pay it forward, and sell your home to another service member or a veteran with enough eligibility, I think it's a great option. You know, it's something that makes the VA loan special and unique. And yeah. So I don't know, does that answer it, Josh?
I think that was great. But Jason, anything from the buyer or the seller side? You work both sides of the aisle here. Anything that you would make sure that you would want someone to know, either buying or selling via assumption?
I think Alexis nailed it when it comes to selling, marketing. I think that's key. You know, when you market it, it's getting people in the door. I mean, that's why open houses exist, get people in the door, not necessarily to sell the home. It's just show it off. And, and then from a buying standpoint, actually from both sides, be patient, be prepared to be a squeaky wheel, you know, communication. The more you can communicate and clearly, the better I think the transaction is going to go for that situation. You know, as Alexis said, it's not uncommon for the assumptions where both buyers and sellers are, you know, more intermixed than normal. Where in a normal transaction, they're kind of like yin and yang. There's not really a lot of commingling. Where the assumptions, it's, you know, we're kind of more of a family. And so there's a lot, and we all have one goal, and that's to get the servicer to get that paperwork done. Yeah, that's it.
I think we just learned some really important life lessons here. Be patient, but also be willing to speak up for yourself when you need to. So it's like that, like you said, the yin and the yang, a little push, a little pull, but you got to just be cool and work your way through it. I guess the piece that I would want to leave anyone watching this and wanting to know about assumptions with is very powerful tool, can make all of the difference in the world. That person that I told you about at the top of the show that got a $700,000 loan, 2.5%, 3% below market. That's life-changing in terms of what it does, the home it gets you into at a different price. And that's still going to be whether it's a $200,000 loan or a $700,000 loan. Just know that it's not super easy. There are people to help you, and many of those people are here in the Vetted VA group, as you can see with the expert that we have tonight. So to the three of you, I thank you for joining and sharing your knowledge and expertise in this, because most people don't know anyone who's ever participated. I have not. So I have three of you here to walk us through experientially what you guys have done. So appreciate you being here and sharing everything. We will be back next Tuesday with another group of experts covering another important topic. So thanks for joining us, and we will see you guys next week.
Bye.